absolutely not transformative. However, they are a step forward. What happened to our economy, the global economy in 2019, is companies stopped making investment decisions because they were just unsure of what the rules were, whether they would be able to run their supply chains. So with the stage 1 agreement, or we would call it a light trade agreement, we might find a bit more confidence out there and companies starting to invest more in their supply chains. Is that the end of the story? No, I don't think it's a really good story as you go further ahead on this. I think even if these trade deals get signed, what companies have learned in dealing with the US administration now is we have a president who will sign a trade agreement or reach a verbal agreement with someone and 3 weeks later change his mind on another issue altogether, which he might claim as national security. So we've moved out of a world for 50 years where companies could comfortably build global supply chains into a world where companies are really going to be cautious about this.
Is the agreement that we have, let's talk about the US-China deal, this phase 1, you called it a light agreement. Is that enough? Is there enough meat on the bones essentially for companies to start dipping their toes back into the water and making investment decisions? Because we heard from the Treasury Secretary last week speaking to us on this show that there's likely to be phase 2, A, B, C, D, E, and so it goes on and on and on.
As far as the Chinese side is concerned, phase 2 kicks in after the US elections, November next year, and we'll see who we've got. If you ask China who's going to win that election, they're pretty confident Trump will win it, but as to what they might give away in those agreements, not much. What you can see from China's side is, yes, it's agreed to make some changes. They're actually very beneficial for China, and it's pretty much stayed on the course it was following. So I don't want to talk down the agreement too much. It is wonderful that we get an agreement, we get some of the uncertainty removed. That will help companies get business going, but they've all decided we're in a different world now.
You say that the global growth will likely probably be modest again in 2020. These agreements aren't going to do a lot to, of course, spur a big pickup. What does that then mean for equity markets in 2020? Because 2019 has been, of course, a record year, another fresh record for the US indices overnight.
Absolutely. I'd say on the stock markets, it's more narrowly based. It's been the IT companies and those sorts of companies that have driven it. I'm actually a little more positive on 2020 than you were just indicating. So 3 things to look at. On the trade wars, at least we stop exacerbating the situation and start to calm it down. That's a plus for investment. 2 other areas we're looking at. One is fiscal stimulus. Right across the advanced economies, the central bankers, even the head of the IMF, have been yelling at governments. It's time for you to lift your end of the problem here, to address your end of the problem. Lift the fiscal stimulus. Debt costs you almost nothing, and we're beginning to see governments respond to that. So we're expecting quite strong fiscal stimulus.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.